So that's something we're keeping an eye on, and how much ground can be made up. For that, we get a read from Scott Martin, Kingsview Asset Management CIO, Jonathan Honig as well. Scott, when you look at a day like today, I do notice it's very, very hard for the market to put two back-to-back winning days together. They'll get a spurt of activity, and all of a sudden it will dissipate. And then the common rule is to sell than to buy. That might change, but it has been a pretty reliable rule of thumb. What do you make of that?
Yeah, a factor of the market phase right now, Neil. You mentioned it. I mean, alpha earnings, you get good revenues, and the stock goes up and then gets sold throughout the day. So that's the phase we're in, and that's going to continue, I think, through this earnings season. But you mentioned a couple names in your intro there. My goodness, I mean, Facebook coming out very soon, Amazon and Apple left to come out as well. The good news is, I think, if there's any silver lining with what happened with Netflix some days ago, the expectations are starting to come down. Google yesterday, too. So as these companies come out with new reports, if Facebook does fall flat on its face, pun intended, you might not have as big of a sell-off as one might think, because I think some of the things are happening in Facebook today, selling off right now, that are getting into expectations of maybe lackluster earnings here, at least for this period of time.
Well, if that happened to Facebook, that would be a meta disappointment. See what I did there? It's a meta. All right, listen, guys, if you don't appreciate my wit, then, well, no one appreciates my wit. Jonathan Honig, let me ask you a little bit about, and we've touched on this before, Jonathan, what you tell investors these days. Some of them, especially with the big technology names, and even with the fall off of some of them that have, gone well into bear market territory, they still made a lot of money on them. And as one investor was telling me, I just don't want to run it back down to no gains at all. So what do you tell them to do?
Well, it's all about one's own individual context, Neil, and also expectations, and also stocks themselves. I mean, as you mentioned, some of the names like Facebook, like Microsoft, Netflix down 70% year to date. So even Meta, for example, it's down 50% year to date. Well, now it has to gain 100% just to get back to even. So I think some expectation setting is in order here. Look, we've had a dramatic comeback since the pandemic lows, everything from the meme stocks to the FANG stocks to technology across the board. So these are the names that have led the market on the way up. And the fact that they're sputtering, as Scott mentioned, sputtering so heavily now. I mean, even today, Neil, 555 new lows, only about 8 new highs. So the market's having trouble getting going without tech leading the charge.
You know, guys, what I thought was kind of interesting, and maybe a story of our times, is what happened to Robinhood. You know, now announcing it's going to lay off 9% of its workforce. This was sort of the means by which a lot of young people in particular, as you know, Scott, got into the market. And I'm wondering if that is saying something about the frenetic activity behind that, and whether this is an indictment of that. What do you think?
There was, I'll tell you, flash in the pan for Robinhood. It was also the darling, Neil, to steal that word from you, the darling of the IPO smash that was going on about a year and a half ago. Right. So they got public, they got liquid. A lot of folks got rich off of that. They were, privately holding those shares, and they kind of succeeded in that route. But once they came out, once you kind of saw what the company was all about, had some trading issues and some other things going on there at the company that were not well run. Obviously, it got the right valuation and continues to do so. And, of course, competition. I mean, with respect to what they're doing, they're not doing anything amazing with respect to how their business is. So, therefore, as they continue in their, say, line of flight here, I expect the stock to go lower.
For technology as a group, how are you playing it these days, Jonathan?
Well, I mean, I'm actually avoiding it, Neil. I mean,
wow.
Technology is such a major part of the S&P 500, of the Dow. I mean, these companies aren't tech companies anymore. Apple, Microsoft, Netflix, these are the stalwarts of the overall economy. So even if some of our viewers don't think that they're overweight in technology, just that S&P 500 index fund is likely has a big portion of it in technology stocks. Anyway, as Scott alluded to, I mean, look, the times are different now. We're not in the midst of the pandemic. The Pelotons, the Zooms, those stocks are underperforming now, and inflation's the big story now. I mean, the 10-year yield's gone from about 1.6% to 2.5% in just 1 year. So these are different times. I think they requires a different portfolio than just technology stocks.
All right, guys, if you can just stay right there. I want to get the latest right now on